Welcome back to Morning Trade Live. We go inside out on Zoom ahead of its earnings. Steve Dickens, CEO and principal analyst at Hyperframe, joining us. Of course, I always want to talk about so many things with you, but if many folks are still interested in Zoom, which was a highlight during the pandemic, went up to almost $93 late last year. Tell me some of your thoughts about where its placement is these days.
Well, Nicole, thank you for having me on the show. As you mentioned, Zoom was a darling at the beginning of the pandemic. We all went to use Zoom to communicate as we went remote. It became part of the public lexicon and the zeitgeist. We had Zoom calls with our family to keep in touch during COVID. But as we wind forward, we look at where the company is now. Those big tech players that it competes against, whilst regulators don't like bundling, it is a reality of where we see Zoom in its competitive landscape. You look at the likes of Microsoft, you look at Google, you look at Cisco, it's up against some very big names as it tries to compete. And particularly with somebody like Microsoft and that bundling with Teams, we've seen that impact. And what I'm going to be looking out for is where that guidance comes from when they report later on today, and some of those headwinds that they see. I think it's fascinating that this has become almost an adjective for how we communicate, and the platform's ubiquitous. We're doing this remotely via Zoom, so Schwab uses it. But I think the challenge longer term, and where I'm going to be looking at guidance, is how can it compete in a competitive landscape where AI is transforming how people use these types of tools with transcription? How can it compete against the likes of a Microsoft, a Cisco, a Google, who've got very deep pockets and who can compete and bundle their solutions with other components that Zoom doesn't have?
And at least you mentioned all these competitors, at least they had Skype go away. That was one that sort of has fizzled out. That must have helped a tiny bit. At the same time, they changed their name from Zoom Video to Zoom Communications. Is the company in a transition? Does it need to transition in order to stay integrated, competitive in the AI world?
Exactly, Nicole. I think if we look at it just as a video platform, there's not enough surface area and not enough TAM. And as I say, some of those competitive pressures against the bigger names are going to hurt the company. But they've obviously seen that pivot. They're getting into call centers, they're getting into other areas and trying to expand. But my challenge is they announced an integration earlier this month with ServiceNow. Is that an acknowledgement that they need to be operating on a bigger surface area? They need to be operating in call centers in order to stay relevant and to continue powering growth? Or is that an indicator that long term there's an acquisition target from one of those bigger platform companies, somebody like a Salesforce, somebody like a ServiceNow, that could potentially look at Zoom, look at its pervasive adoption and go, we can integrate that with our platform and take it to that next level of growth?
All right. What about the big picture? I mean, you look at all the hyperscalers all the time. You come in as our tech expert, Steve. What's the tech landscape now? Many folks think every dip is a buying opportunity. Are there certain names that are exciting to you right now?
Well, I'm out at Dell's conference. That's why the background's different than normal, Nicole. So fantastic opportunity to chat with Michael Dell yesterday. Really bullish on where we are with the agentic sort of push across the entire AI landscape. We're still really early. I spent time with Dell's CTO talking about just where we are foundationally on some of the technology, talking about some of the move around standards, around how these agents can talk to each other. Lots of technology to unpack, but I think the big picture takeaway for me from a day with the senior leadership at Dell was we're still so early. We're starting to move to enterprise adoption. That's a picture for Zoom as well, as we start to see transcription and some of those AI services. It's going to be fascinating on the earnings call to understand how Zoom plans to incorporate AI, what that means from R&D investment, what that means from CapEx spend. Those are key indicators. If they're not spending that R&D money and they're not spending that CapEx, What does that say about their longer term prospects? So I think there's lots here to unpack. I think we're still really early. We're 2 years really into AI, and I see this as a 10-year trend. So a lot of the companies, the picks and shovels companies, obviously Nvidia were out at Computex, and lots of announcements from those guys over the weekend. So I think we're still foundational, and I still think there's a long way to go on this trade. There's some headwinds for people like Zoom, particularly from the macro. You look at seat compression. We've seen layoffs from people like Microsoft. We've seen layoffs in the U.S. government. These seat-based licensing models that somebody like Zoom has got, that's obviously a challenge. So I think there's a lot to unpack on this AI trade, but I'm long-term bullish, Nicole, and I still think we've got a long way to go for a lot of the names that are in play. Dell being one of those, obviously Nvidia, and there's a whole bunch of others.
Yeah, understood. A quick thought on Nvidia today. I saw that hedge funds are now leveraging and shorting in a big way. In fact, now boosting leverage to new highs as they short stocks once again. And people have been so excited about Nvidia. Is Nvidia a winner in the long term? A quick Nvidia thought for folks.
Well, so Nvidia were making announcements this week in collaboration with HPE that they were also on part of the main stage with Jensen, with Michael Dell here at Dell Technologies World. I think these large enterprises are looking to adopt Nvidia technology at scale. That's driving innovation all throughout the stack. I think whilst there might be some short-term gyrations, and the investors like to invent things to sort of think about, I think where I look and where I track is that we're long-term bullish on Nvidia's prospects, just because of the pure scale of innovation that they're bringing to market and the robust ecosystem of partners that they're working with.
Steve Dickens, Hyperframe Research, thank you for looking at Zoom and more. We appreciate it. Let's bring
Nicole.
George Tsilis into this conversation. Now he will trade Zoom Communications. You have a more neutral example trade here, George, this morning.
Yeah, we can start with a neutral trade. We've got the earnings event we have to consider. So if you look at the price action today on Zoom, it's trading relatively, balances slightly to the downside by about 50 cents. But nonetheless, if you want to play the volatility expansion that's going on prior to the earnings event, and we've got a narrow time frame to expiration, if we choose the weekly options that expire on Friday, we could structure a credit combo in moving into earnings within taking into consideration the market maker move, which right now is approximately $5.75. So that implies a standard deviation move of that dollar amount, which again is a 1 sigma move. So we're going to sell right around that 1 sigma move going into expiration on Friday, very narrow time frame. So I'm going to sell a 90-93 call spread that's outside the market maker move. On the high side, on the low side, I'm going to sell the 77-74 put spread. So altogether, you could earn on this $3 wide structure $1 per share or $100 in credit per contract. So essentially, we'd want to see the stock just trade range bound below and above the short strikes, and that's 90 on the high side and 77 on the low side. If it does move above or below that, we have to consider break-even levels: 91 high, 76 low, and so we're earning $1, but the risk is $2, and that only occur if the stock moves beyond the 1 standard deviation move by a significant degree above the $93 and below $74 on the low side.
All right. And then wait, before I let you go, you have a more bullish trade for Zoom as well that you're going to show us an example.
Yes. So, if you look at the trend right now, at least on the daily, the stock is trading above the 20-day moving average. It's pulled back a little bit in the last few days, and that's indicative of some of the market weakness we've seen because it's moving in sympathy with the market. If you're a little bit more bullish and you want to also play the volatility crush in those near-term options, because the implied volatility in the expiration on Friday options is very high, you could structure a bull call diagonal. And so in this case, I'm going to sell at 87, a little bit lower than our 90 in our previous trade. weekly expiration that expires on Friday. So I'm going to sell the 87. And then I'm going to use the proceeds to help finance an in-the-money $80 June monthly call option. So I'm going out another 4 weeks or 30 days in this position. And altogether, it would cost you, in this case, $4 a share in debit or $400 a contract. So the sweet spot in this trade would be, expiration Friday, around 87 or lower. But again, you're covered because if it does move above that, your $80 June call option will increase in value. So if it does expire worthless on Friday, the 87, you're unbounded in terms of profit potential, but your break even in June is 84 if you do hold that, which is about $1.30 away from the current price.
All right, George Tsilis, thank you. Great to see you, and good luck there at Zoom for us today.